Okay, good morning, everyone. So welcome again to FSM Expo 2024. So my name is 𝗪𝘃, and I'm with the research team at iFAST. So earlier today, you've already heard my colleagues share about the 11 key investment themes of our 2024 outlook. And earlier, Polun also shared about our outlook on the big tech sector, which is also one of the sectors that we are immensely positive on. So continuing on this theme, I will be sharing about another sector that we are also positive on, and that is none other than semiconductors. Now, if you've been an avid follower of FSMOne's presentations, you'll notice that we have talked about this sector multiple times in the past already. Sometimes the outlook is good, sometimes it's not so good, but overall, I can say that we still like this sector very much, and we think that it will be one of the best performing sectors over the next decade. But before I go into the reasons why, let us take stock of what's happening in the sector, starting with share prices. So as you can see on the screen, 2023 was actually a very good year for semiconductors, with many of them seeing their share prices rising by close to 70% on aggregate. So in contrast, the broader equity market only saw a rally of about 24%, and that is gauged by the S&P 500 index. So this sharp rally in semiconductor stocks, it is attributed to several factors, such as the AI frenzy that has taken the market by storm. And besides the growing investor optimism surrounding the expected recovery and also possibility of a soft landing, falling treasury yields, all these things have also contributed to the rally in chip stocks. And lastly, we also think that some investors, they may be starting to price in the future earnings growth of these companies, sending share prices up. So if you're one of these people, then good for you. But if you're not, then let me try to convince you on why you should. So looking at the industry itself, starting with the sales growth numbers, you can see very clearly that the semiconductor industry, it is currently in a downturn, with sales growth going into negative territory in the fourth quarter of 2022. And sometime in the middle of last year, sales growth actually hit as low as negative 20%. But today, things are starting to turn around already. So the latest quarterly sales data shows that the sales decline is only 7% year on year, and the monthly semiconductor sales have actually risen by about 8 consecutive months already. So even though the near-term outlook for the sector it is likely to remain challenging, as noted by several chip makers, we have a bold prediction to make. And that prediction is for semiconductor sales to hit 40% year-over-year sales growth by the second quarter of 2025, which is the highest level over the past decade, as you can see on the chart. So we believe that the semiconductor industry, it is once again at a pivotal turning point, thanks to the rapid adoption of AI, which requires numerous highly complex chips that are capable of handling huge complex workloads efficiently. And just like the previous revolutions, such as the PC, mobile, and the internet revolution, we believe that the AI revolution will bring tremendous opportunities to chip makers over the next decade. And when this eventually materializes, we do expect earnings for chip makers to soar along with their share prices. So more broadly speaking, underpinning our prediction of this investment thesis is that chip makers, they will see a massive structural increase in demand as the world becomes increasingly digitalized, leading to number one, more semiconductor applications, and number two, higher silicon content in them. So semiconductors, they are the bedrock of all modern technology, and I think it's not hard to see why chip makers will benefit as the world we live in becomes increasingly digitalized. So these days, semiconductors, the use has been widespread. You can find them in everywhere, such as the watches that you wear and even the cars that you drive. And that is because, like I said, there are a lot of smart devices that are going on already. And now recent innovations such as AI, they were only made possible because of advancements in semiconductor technology. And to add to our conviction is that this generative AI frenzy that took the world by storm with the launch of ChatGPT somewhere in late 2022 has also added to our confidence that this sector will be one of the best performing over the next decade. And with AI investment set to surge over the next decade, we think that chip makers, they are in prime position to reap the benefits of this structural megatrend. So as a matter of fact, we are already starting to see a few beneficiaries of this AI revolution. So NVIDIA, which is arguably the poster child of AI investing, saw its data center revenue rise from a negligible amount in 2014 to close to more than 15 billion in 2023. And today, the segment has also become its largest source of revenue, accounting for more than 60% of the total. And aside from NVIDIA, other chip makers such as TSMC, Micron, they have also acknowledged in their recent earnings call that AI will probably be one of the biggest structural growth drivers of chip demand over the next decade. And apart from this, the silicon content in most of the existing applications, it has also increased significantly over the years. And according to a study that is conducted by IC Insights, the value of semiconductors in electronics, it has risen from roughly 20% at the beginning of this century to more than 33% in 2021, and that number is still projected to continue climbing. So take cars, for instance. While a traditional internal combustion vehicle or petrol car, they will have typically somewhere between 300 to maybe 1,500 semiconductors, a new electric vehicle has easily twice that amount. And those cars with self-driving capabilities, they will require even more semiconductors given the sheer number of cameras and sensors that these cars employ. So the bottom line is this. As the world becomes increasingly digitalized, we think that chip demand will only become stronger than before, and this will bring immense benefits to the entire industry as a whole. So moving on, in addition to the growth drivers that I mentioned earlier, we also think that the adjustments to the inventory cycle should also help the industry to achieve its 40% year-on-year sales growth by the second quarter of 2025. So to briefly explain, semiconductor cycles, they are essentially driven by fluctuating sales growth numbers, which are caused by distortions to supply and demand dynamics. Now, there are a couple of factors, but I think for the most part, these distortions, they can be explained by the over and also the underestimations in production levels. So given how dependent the world is on technology and also the growing number of end-use products that we have today, I think it's logical to think that the demand for semiconductors and also electronics, it tends to increase steadily under normal conditions. So this is actually represented by the gray line, which depicts a simplified version of the inventory cycle. So on the contrary, the supply of semiconductors, it tends to vary a lot more. And this is mainly due to adjustments in production levels by chip makers. So when times are good, chip makers, they tend to overestimate demand and invest heavily in the capacity and produce more than what the market can absorb. So over time, this high level of production eventually becomes unsustainable as inventory starts to build, leading to an oversupply. So when this happens, chip makers, they tend to cut down on production and also slash prices in order to work through this excess inventory, which causes sales growth to fall, and even as demand remains relatively stable. And this is exactly what has been happening in the chip industry over the past year, where you see in the memory sector, companies like Micron, SK, and Samsung, they have all been cutting production and lowering prices. But the good thing is, just like how chip makers, they have the tendency to overproduce when times are good, they also have the tendency to underproduce when times are bad. So put simply, it is this excessive adjustments in production levels that leads to fluctuating sales growth numbers, and that is a characteristic that defines the cyclical nature of the semiconductor industry. Now, if you can recall, the pandemic actually kick-started a global chip shortage in 2020, led by supply chain disruptions and an unnaturally high level of demand, which is a direct result of the stay-at-home economy. So facing pressure from governments and also their customers to alleviate this shortage, many of these chip makers, they actually made commitments to expand capacity, as you can see from this chart over here, which shows you that the industry capex rose by 39% and 20% in 2021 and 2022 respectively. So unsurprisingly, this sudden and sharp increase in spending resulted in a supply glut. So even without looking at the growth numbers, I think if you look at the chart, you can see that in terms of the absolute spending for those years, it is significantly higher than the previous years. However, in 2023, many of these chip makers, they started to make significant downward revisions to their capex budgets, citing bloated inventory levels and weak demand as one of the key reasons. And on an industry level, CapEx is projected to shrink by nearly 20% year over year as chip makers, they continue to hold back on spending. So right now, we think that even though the near-term outlook, it certainly warrants a more cautious approach. We think that in the long run, chip makers, they are actually underestimating the impact that AI will have on chip demand in the long run. And the demand of which, the supply of which is currently inadequate to fulfill the demand. Moreover, we also think that once this down cycle it blows over and clearer signs of recovery emerge, we think that chip makers will likely feel more confident to bring more supply online, which should translate to higher sales growth in the future. And also, with the industry in a steep downturn today, as I've shared earlier, we think that the low base effects, it should also play a part in driving sales growth higher in the future. So last but not least, another important factor behind the growth of the chip industry is also the massive amount of support it receives from the government. So across the world, governments are handing out massive incentives to build fabs, adding to the total supply of semiconductors in the years to come. So if you look at this table over here, in the US, of course, we have the Chips and Science Act, which promises over $280 billion in new funding over the next 10 years to boost American semiconductor R&D and also manufacturing capacity. And since this act was passed in August of 2022, we have seen several chip makers like Micron, Qualcomm, so on and so forth, pledging to increase their investments on US soil. And even foreign chip makers like TSMC, for instance, they have also started to take advantage of this Chips and Science Act by building 2 plants in Arizona, which it targets to be operational by 2025. And aside from the US, Europe also has a similar act which aims to address future semiconductor shortages and also strengthen the continent's position in terms of technological leadership. And over in Asia, we cannot forget China. So China has also made the development of its semiconductor capabilities one of its biggest national priorities. And the reason for that is because of all the export restrictions and all the sanctions that the US and its allies have levied on China. And as for China, support mainly comes from the central government in the form of a state-backed fund, which has raised a combined total of $40 billion in the first 2 phases. And in September of last year, it was just announced that this fund has gone into phase 3, which it has a target of another $40 billion. And aside from China, Japan, whose chip makers were once the most dominant players in the industry back in the 70s and the 80s, they are also starting to look for ways to regain its lost status as a semiconductor powerhouse. So the Japanese government, it has also launched several initiatives geared towards attracting semiconductor investments on Japanese soil by fostering greater collaboration between its domestic companies and also its foreign partners. So taking into account all the factors that I have mentioned earlier, particularly the megatrends of AI and digitalization, we are confident that semiconductors, it will be one of the best performing sectors over the next decade. And with a recovery of the chip cycle in sight, we also see a positive earnings outlook for semiconductor companies in the road ahead. And overall, we believe that the industry, it is again at a pivotal turning point thanks to the rapid adoption of AI, which should result in robust earnings growth and multiple expansion for chip makers. And although valuations for the sector are currently elevated, if you look at trailing 12-month earnings, what we urge investors to do is to look beyond the near-term headwinds and try to imagine what this sector will look like 5 to 10 years from now, especially with this AI megatrend unfolding. And I think if we all can set our sights further ahead, it's not hard to see that earnings have more room to rise. And given that earnings, they are a key determinant of share prices in the long run, I think it's also logical for us to assume that share prices of these companies will grow as well. So on that note, if you're someone who is concerned about the high valuations, but you still want to invest in this sector, I think what you can do is you can opt for a regular savings plan, such as the one we have on FSM, and wait for valuations to come down before switching to a lump sum investment. And of course, you can do so using our recommended ETF, which is none other than the VanEck Semiconductor ETF. So just a brief recap, this ETF invests in a basket of 25 US listed semiconductor stocks. It also employs a modified market cap weighting methodology, which favors some of the largest and also the most liquid companies within the industry itself. And if you look at the table on the right, you can see in the top 10 holdings, there are many familiar names, such as the likes of NVIDIA, Intel, AMD, so on and so forth. Furthermore, this ETF has also been on our focus list since 2018, as it has consistently ranked the highest, ranked the best among its peers. And one of the things that we like about this ETF is its low expense ratio of just 0.35%. And on top of that, it also has a sizable AUM and also a large trading volume with more than 7 million shares changing hands each day. So what this means is that you, as an investor, you should be able to enter and exit positions easily. And overall, I think that ETFs, they are a great way for investors to get diversified income, to diversified exposure to certain sectors, especially if you are someone who doesn't have the time to monitor multiple stocks in your portfolios, or you are someone who is just not that confident with your stock picking skills. So alternatively, instead of investing directly in the sector, if you're not comfortable with that, other options would be to invest in markets that will benefit from the semiconductor upswing. So markets such as Taiwan and South Korea, these two countries, they are heavily dependent on semiconductor exports, and also Japan, like what I mentioned earlier, with them trying to regain their lost status as a semiconductor powerhouse. Or even markets like Singapore and Malaysia, where a sizable part of the economy is also exposed to semiconductors. So more on these markets will be covered by my colleagues in the later session. So I've come to my final slide already, and whenever I talk about semiconductors, I always like to end with this slide, for the simple reason that it sums up the investment thesis in the most simple and, to me, sensible way possible. So if there's only one thing that you take away from this sharing today, it should be that without semiconductors, none of the technology, your iPhone, your Netflix, your Instagram, none of these things will exist. And as the world we live in becomes increasingly tech-driven, the demand for semiconductors will only become stronger. And with that, ladies and gentlemen, I've come to the end of my sharing today. I'd like to wish everyone here all the best in your investing journey, and I hope that all of you can make lots of money in 2024. Thank you.